In this lecture, we are going to continue explaining how to develop the business plan. Let us begin with the fifth element in the business plan, which is organization and management. Before you start, select the type of business structure that is best for your business. Also, the choice of the form of business is important and can make a difference with regards to the cost of a startup and the amount of legal fees for registering the business. Second, simplicity or complexity of starting and administering the business. Third, financial risks for the owner of the business. Fourth, possibility of having business partners. Fifth, the way decisions are made in the company. And finally, sixth, taxation of business profits. There are many types or forms of business according to the legal perspective and can be classified into the following. First, sole proprietorship. As a sole proprietor, your business will be owned by you alone, and you will have the authority to make all the business decisions. Second, partnership. If two or more people decide to start a business together, they can form a partnership. Third, cooperative. A cooperative is formed by a number of people who decide to work together for a common purpose. Fourth, limited company. A limited company is owned by one or more owners called shareholders. All the owners may or may not work in the business, or some owners may actively run the business, while others are merely investors. Now, back to our example, city garbage recyclers. John and Mary realized that relatively high costs will be incurred in obtaining a different license from different regulatory bodies. And in order to keep individual costs low and yet manage the business effectively, they decided to enter into a partnership agreement. Consequently, they register it with the Office of Register of Deeds. And the picture you see explain their partnership agreement includes first line of business, which is manufacturing organic manure. Second, division of profits. The profit will be divided equally between John and Mary. Third, duties of partners. John will be responsible for the overall management of the business, and Mary will be responsible for managing the factory. And when they have agreed to start their business as partnership, they fill in the legal form of business section of their business plan, which is presented in the next slide. The picture you see shows the legal form of business from your business plan book, and is composed of first the termination of the legal form, For example, partnership as Mary and John, and you should determine the reasons for choosing this specific form, which is a partnership. And finally, you should give some information about the owners, like the name and the position in the business, and a description of skills and relevant experience. Legal responsibilities and insurance. In this topic, we are going to explain the following. First, taxes. Your business will collect some taxes from your customers and forward them to the government tax agency, for example, sales tax or value-added tax. The business is also responsible for deducting and forwarding to the tax authority pay as you earn or income taxes from employee salaries. Also, other taxes are paid by the business itself. If the business is profitable, the government tax authority will tax a percentage of the profit. When your business buys goods or services from other businesses, it is responsible for paying sales tax or value-added tax to those businesses, which will then forward the amount to the tax authority. Second, employees. Find out what labor laws and regulations apply to your line of business. For instance, in most countries, when you hire permanent employees, you need to contribute to the pension fund and to the health insurance program. Third, licenses and permits. Find out if you need a license and where to get it. For some businesses, there may also be special permits needed to operate. Find out if this applies to your business. Fourth, insurance. If you insure your business, you will have some financial security against losses that are caused by accidents, disasters, or other types of incidents. Also, risks such as a drop in the demand for your good or service are part of running a business, but other types of risks can be offset through insurance. For instance, property, machines, stock and vehicles can all be insured against theft. Also, property can be insured against damage caused by fire or accidents. In addition, your employees, your family, and you can all be insured against accidents and for medical expenses. Now, back to our example, city garbage recyclers. John and Mary have contacted the regional tax office and the local government authorities to find out what legal requirements apply to their business. They write down what they have learned in their business plan. The picture you see represents or shows the legal responsibilities and insurance in our example, the city garbage recyclers. They determined the type of taxes and regulations applied to the employees and the licenses and permits and their costs that the business need. And they determine also other responsibilities of the business. The picture you see shows the legal responsibilities and the insurance from your business plan book. Now, we are going to explain the sixth element of the business plan, which is buying for your business. If your business is manufacturer or service provider, you need to buy equipment and raw materials to make goods or services. If your business retailer or wholesaler, you need to buy finished goods to resell. So, we are going to discuss three main elements, which are equipment, raw materials, and finished goods. Equipment. Equipment is all the machines, tools, workshop fittings, vehicles that your business needs to make goods or supply your services. To choose good equipment, you should consider the following. First, does the equipment work well? How often does it break down? Second, is there another new kind of equipment that would be better? Third, which equipment is the cheapest to run and the easiest to operate? Fourth, do I need special training to use the equipment? Can I get it? Is it free? Fifth, how long will the equipment last? Sixth, does the supplier give a written guarantee? Seventh, will the supplier install the equipment and service it? Eighth, are spare parts available locally? And how quickly can I get them? And how much do they cost? Also, you should decide what is the best use of your business money. So, should your business buy new equipment, or buy second-hand equipment, or borrow, or rent, or lease equipment, or pay another business that has the equipment to do the work for you? In addition, investment in renewable energy is a very important issue. And there are three major reasons why you might want to invest in renewable energy equipment. First, your planned business is in a place where there is no electricity or the national grid is very unreliable and the power outages will disturb your production and business. Second, it's cheaper to produce energy using renewable forms. So you will save on energy costs in the long run, even if the equipment is more expensive. Third, governments incentivize the investment in renewable energy. Also, subsidies are paid in the form of feed-in tariffs, either for the electricity generating equipment or for the investment. Note that if you are considering buying renewable energy equipment, find out what equipment is needed and the capacity of the available equipment and the amount of electricity you will need and the investment costs, taking the government subsidies into considerations. Now, back to our example, city garbage recyclers. John and Mary need to buy equipment to produce compost manure. They have asked equipment suppliers in the city and also taken advices from a non-governmental organization. The non-governmental organization provided them with useful information on several types of equipment. Finally, John and Mary decide to buy bioenergy equipment, which is operated by electrical power and biogas. Also, it's more expensive than the electrical equipment, but it can save on energy costs. Raw materials. Raw materials are all the materials and parts that go into the products you make. Also, planning the raw material your business needs is important to ensure that the business has the sufficient raw materials for production so that products are delivered timely to customers. Also, you may need to stock raw materials to ensure they are available when you need them. But overstocking will waste your money, so you should keep the stock of raw materials as minimum as possible. Finally, you should buy the materials from reliable suppliers and make sure the quality is good, which will increase the acceptance of your products in the marketplace. Finished goods. When you buy finished goods, you should consider first, which types of goods do your customers want? Second, do your customers want quality assured goods? Third, what are your customers' environmental concerns? Any health concerns? Fourth, what prices are your customers willing to pay? Fifth, how many each type of good can you expect to sell per week or per month? Sixth, can you buy the goods directly from the manufacturer or should you buy from a wholesaler? Also, similar to buying raw materials, you can estimate the amount of finished goods needed based on the sales estimation so that you can keep stock of finished goods as minimum as possible. And some suppliers are willing to provide goods on credit to increase sales. Note that buying on credit is often expensive, as you might be required to pay interest fees on top of the base purchase price. However, it could help you to get through your startup phase if you don't have sufficient capital. Now, think about your business and list down all things that you need to buy to start your business. The table you see can help you. Now, we are going to explain the seventh element of the business plan, which is greening your business. Let us begin with your business and natural resources. Businesses depend upon natural resources and use them in the production process in different ways, including most businesses need materials in their production. These can be renewable ones such as wood, recycled ones such as from plastic waste, or non-renewable ones such as cement, non-recycled iron, and wood from deforestation activities. Most businesses need electricity, of course, or heat energy in their business. Energy can come from renewable sources such as from wind, sun, water flow, sustainable wood, or from non-renewable sources such as diesel and fuel. Also, most businesses need water. Water can come from sustainable sources such as from rainwater harvesting or unsustainable sources such as excessive groundwater pumping. Most businesses also produce solid and water waste, which the natural environment needs to absorb. Note that all businesses are located in and surrounded by a natural environment. This natural environment can be clean and healthy or very polluted and dirty. A healthy natural environment is an advantage to your business, notably when you work in tourism. The beauty of the place will attract tourists and make them stay longer. Also, overuse of natural resources and excessive pollution leads to their depletion and affects the viability of businesses depending on them. For instance, businesses that deforest and overuse wood from non-regenerating forests will cause soil erosion and lack of wood for future needs and deterioration of natural water purification and climate change. This in return will affect the business itself, as it depends on wood and clean water or fertile soil. Also, businesses rely on the health of their workers and owners, which is threatened by the degradation and pollution of the environment. Increase efficiency and profits. A common strategy for increasing efficiency and hence profits is the 3 R's approach, which are reduce, reuse, and recycle. First, reducing. Reducing unnecessary consumption and therefore waste is the most important step. It can be done if we change our consumption behavior by buying more durable products, keeping them longer, and not turning them in for each new innovative product in the marketplace. Second, reusing. Reusing things is another way to diminish the amount of waste we produce. Old objects can be used in new ways. Using old objects to create new objects is a reuse. Third, recycling. Recycling is the third priority in the 3 R's efficiency strategy. It can be done when reduction and reuse are not possible. Recycling can provide new raw materials from waste materials. Therefore, recycling prevents waste disposal and the need to extract more raw materials from the natural environment to create more new products. It establishes a cyclical production process. Fourth, disposal. Disposal is the last resort. It's chosen after all the other waste management options have been exhausted. Disposal involves the dumping and incineration of waste. Therefore, the waste should undergo pre-treatment before being ultimately disposed in order to decrease the quantity of waste or its toxicity. Classifying the waste. When we produce waste, most people don't separate organic waste from inorganic waste, but dispose all the waste together. To categorize and then sort the waste is essential. First, organic waste. Organic waste is biological. Some examples are rotting plant life, food and animal waste, due to its characteristics, this waste is also called wet waste. It's biodegradable and can be processed into organic fertilizer like the compost that John and Mary at City Garbage Recyclers plan to sell. Second, inorganic waste is that which doesn't come from nature but is produced by mankind. Some examples of typical inorganic waste are metals, glass, and plastic. This waste contains many materials that can be recycled. Due to its characteristics, inorganic waste is also called dry waste. Note that recycling dry waste is a sensible way to expand your business opportunities. Now, think about your business and the waste that is created. What can be reduced and what can be reused or recycled or sold as a raw material? For what purpose can items be reused or recycled? List the waste and estimate the quantity and suggest a strategy to reduce and reuse and recycle. Of course, the 3 R's strategy. Now, the table you see can help you in this mission.